Fiona Boyd here, U.S. Director of Acuity Commodities. Thank you for joining us for this fifth episode of our podcast. Joining me today is Freda Gordon, UK Director of Acuity Commodities. Welcome, Freda.
Hi, Fiona. I have to say, over the 15 years we've known each other, we've spoken all around the world and through many different channels, but it's the first time that we're both sitting in a proper recording studio doing a podcast together, so it's pretty fun. Let's do it.
All right. We are recording this on December 1st, 2025, and today's objective is to provide a summary of the notable developments this year in the sulfur and acid markets and the tone they're setting for 2026.
Yep, indeed. And we've seen a very complex year with some prices at levels not seen in over 3 years amid a volatile geopolitical landscape. I think it's fair to say, Fiona and I, both of us are more used to analyzing markets by looking at the fundamentals, so supply and demand. But these days, geopolitics plays a much bigger role than I ever imagined.
Absolutely. So let's start with sulfur. Pricing-wise, we saw prices firm essentially all year, except for a brief lull in July. As an indication, the Qatar monthly sulfur price was announced yesterday for December at 495 FOB, up from 166 where we started the year in January. This is really incredible when we consider the average price last year was 99 FOB. In the last price rally, it peaked at 490 FOB. The only time it could have been higher than that was in 2008.
Isn't that amazing? So let's talk a little bit about why this is happening, right? So to me, three large drivers. Number one, growth in demand in Indonesia. Number two, Middle East dominating supply while being price givers and not takers. And finally is Russia halting exports of sulphur. So I've got some stats for your reference and for anyone who likes numbers. Indonesia imported 3.7 million tons as of the end of third quarter this year. So that's up around 1.3 million tons on the prior year period. So when we started Acuity in 2016, Indonesia was only importing 700,000 tons for that whole year. And then out of the sulfur that they imported so far this year, Saudi Arabia and Qatar accounted for a combined 53% of the supply. And the combined volume was up by close to 1 million tons again from the prior year period. And if you combine all the regional exports from the Middle East last year, it was around 15 million tons, and that itself represents close to 54% of estimated global trade of close to 28 million tons last year. It's fascinating.
Mm-hmm. So I would say the thing we're being asked the most is when are we going to see some price relief? We've been discussing in the reports that demand destruction seems more likely than a supply improvement to reverse course.
Yeah, and we're not really seeing too much on the supply side that would suggest any imminent improvement, especially when we consider the sulfur export ban from Russia. And by the way, last week, Fiona, I was looking at the latest data from Russian railways. Sulfur sent to export terminals, Russian sulfur, of course, went down. Now, Russian companies are still allowed to export to certain Eurasian Economic Union countries, so the October exports were at 21,000 tons. It's not really zero. What is interesting to me, though, is the Russian sulfur that is for the domestic deliveries. That totaled just 195,000 tons in October, which is down 16% from the month before. So what this really says to me is the ban on exports did not increase delivery to the more important domestic market. So I personally still believe that the ban could extend beyond December 31st, 2025.
Mm-hmm. And while we're seeing refinery and gas processing capacity additions next year, we don't see any of them really impacting the seaborne market. We see expansions and additions next year in China and India, but that's being offset by smaller refinery closures and increasing demand, mainly for fertilizer production. Meanwhile, we have seen sluggish refinery starts in markets such as Mexico and Nigeria. And while incremental tonnage can be provided by using long-held sulfur inventory, that was depleted this year in Kazakhstan. Canada is home to the largest accumulation in the world at over 10 million tons, but there are significant costs to bring it to market that must be passed on to buyers.
So this suggests then that the Middle East will remain the key supply region for the seaborne market, right?
Hmm.
And we know that there is increased competition to secure tonnage, Middle East tonnage, which leads to some traders being more willing to increase the premiums they pay to monthly posted prices for 2026. So I think that will provide further price support for next year.
Hmm. Meanwhile, amid all this, we are seeing firm demand with buyers not saying no to the ever increasing sulfur prices. This is because phosphate pricing is at robust levels not seen since 2022. And we're seeing increased demand from metals producers with the growth in Indonesia, a prime indicator of that. For price stability, buying stability in Indonesia would be helpful as it surge in buying without long-term substantial contracts or notable storage ability like China has certainly impacted the market this year. In the case of China, we have seen its production of LFP batteries supporting its sulfur consumption, especially when phosphates production is slow. How that impacts its overall consumption for fertilizers and batteries remains to be seen, though.
Yeah. It's all very interesting. And on a longer term basis, we are, of course, watching the electric vehicle evolution, the EV evolution, and its impact on various commodities. Particularly is the expectation that sulfur production will decline notably because of reduced refinery throughput, while sulfur demand to support metals related to EVs is expected to grow. Now, I know we talk a lot about nickel, copper, cobalt, lithium, etc. for EV batteries, but I just want to point out that there are some new projects for uranium tailings, rare earths. They are all going to support sulfur and sulphuric acid consumption, especially in Southern Africa too.
Mm-hmm. And as we comb through various outlooks, consensus is oil demand peaks are dragging out largely on a slower EV uptake. And while gasoline and diesel demand will decline, jet fuel, naphtha demand is expected to grow. So that will provide some support for refinery throughput. But on a much longer term basis, forecasts do point to refinery capacity growth exceeding demand, especially, or even though we're seeing refinery closures in Europe and the US. So the scenario is most likely that refinery utilizations must drop or closures must occur, particularly in high-cost regions. So this will then impact where sulfur production is and then impact trade lanes accordingly.
Yeah. And I want to add as well, Europe is interesting as well. Because molten supply, as you said, is declining, but demand is also under immense pressure because chemical producers here are facing strong competition from the US and from China. So throughout the world, there are definitely a lot of moving parts.
Absolutely. Well, I'm sure we could spend many hours talking about the sulfur market, but we'll go ahead and switch gears to acid. While the price environment has not been as dramatic as sulfur this year, there are certainly challenges. The high sulfur price has spurred some acid price momentum in recent weeks, but we are seeing a disconnect in many markets.
Yeah. Ultimately, due to sulfur prices moving up, an increasing number of people, plants are switching to buying more smelter acid. So China is a prime example. That is where Chinese smelters raise their price offers for both the local and the export market. As a reference, current export prices are around $110 to $120 FOB China, and that compares to almost half of that at the start of the year, which is $50 to $55 FOB. And once people seen Chinese value started moving up, acid prices in Japan, in South Korea also picked up to a very similar level. And what's really interesting, and I've not seen it in the last, 15 years or so of covering the market, the timing of this presents traders with a very, very sticky situation because annual negotiations are all taking place.
Mm-hmm. And what I think it's really critical to note is that, that higher Asia FOB pricing works in regional markets like Indonesia, but it's not working for long haul trade. So if we looked at spot pricing from Asia today alongside spot freight to Chile, that would imply landed prices over 200 CFR Mejillones. That's important because Chile is the world's largest sulfuric acid import market. And in recent times, China has served as its top source of supply. So looking to next year, we've seen Chilean fixed price annual contracts settle as low as the low 160s, which is clearly not workable for Asian material based on current market fundamentals. So the question remains how Asian tons will be priced into Chile next year. I'm going to be on the ground in Santiago next week, and this will be at the forefront of my discussions with market participants. Are we going to see a move away from annual pricing? Will buyers leave more open for spot? It remains to be seen.
No pressure, Fiona, next week. And I totally agree with you. So the pressure, from my point of view, is now on everyone to make that equation work, like you said. So there is pressure to raise the CFR contract price in Chile, but that's been difficult, as we know. There is also pressure on ship owners from traders to agree to lower COAs or contracts of affreightment, and the current price gap is still huge. And finally, there is pressure, of course, on the Asian sellers to lower their price offers or at least be more flexible with their pricing mechanism to make things a little bit easier for the middleman.
And since most acid traded is smelter rather than sulfur-based, factors in the metals concentrate markets are impacting acid pricing. Tight concentrate availability, particularly copper, has resulted in smelters reducing their treatment and refining charges to attract feedstocks. So when those are low, or in some cases negative, as we've seen this year, that will continue into 2026. And to offset that, smelters look to increase revenue streams in other ways, including sales prices of byproducts such as acid. We've also seen smelters reduce throughput due to the concentrate market, which is constraining some acid output.
Yeah, and one of the reasons the concentrate market will stay tight next year, as you said, is because of the situation in Indonesia. The force majeure at Grasberg reduced availability of copper concentrates to feed two smelters, both in Indonesia, PT Smelting and Manya, which is new. And this is happening at a time when concentrate availability has stayed tight for over a year. So recent spot market activity, including buying in Indonesia because of Grasberg, has provided price support for the triple-digit FOB that I talked about from Asia. And similar to its impact on the sulphur market, I see Indonesia playing a very crucial role in the acid market next year in 2026. And its acid imports next year will probably depend on several factors. The commissioning of some sulphur burners, new sulphur burners, the price of sulphur, who will be granted import licenses or quotas for acid, and of course the availability of copper con that dictates how much smelter acid will be produced at PT Smelting in particular.
And all this is happening when there remain a lot of uncertainties regarding the demand outlook for other key consuming countries, particularly Morocco. Morocco's import needs will depend on the buyer's strategy as well as downstream profitability and therefore raw material affordability.
Yeah, so, okay, we've been talking for many minutes. Looking to next year for both sulfur and sulphuric acid markets, we have more questions than answers, don't we? And we've only been talking about fundamentals, not geopolitical influences.
So it looks like 2026 is another expected busy and volatile year.
Yep. So I have a suggestion. Why don't we all take a good rest at year end, recharge, come back in 2026 and be ready for anything, literally anything.
Great advice that I will certainly be following. Thank you to our listeners for joining us for this episode. We wish you all a happy holiday season and all the best for 2026.
And cheers for all your support this year. See you in 2026.